On Sunday, March 19th, a 167-year-old Swiss bank, Credit Suisse, came to a sudden and abrupt end as its rival UBS agreed to take over the bank for all of $3.2 billion. UBS will give one of its share for 22.48 shares of Credit Suisse in an all-share deal. The merger was facilitated, almost forced, by Swiss banking authorities, with the Swiss Central Bank, SNB, guaranteeing to pay 9 billion Swiss dollars to UBS on potential losses. $17 billion of AT1 bonds of Credit Suisse have also been written off. Besides, the SNB, the central bank, has also promised $100 billion by way of a liquidity facility. So what went wrong at this storied Swiss bank, which was set up in 1856 to arrange funds for Switzerland's railways? Well, the most recent blow came last week on Tuesday, March 14th, when the bank said it found, and I quote, material weaknesses in its 2021 and 2022 financial reporting process. These included, the bank said, lack of effective risk assessment to identify misstatements in its financial reporting. The next blow came the next day when the Saudi National Bank, Credit Suisse's biggest backer, said it won't buy more shares in the Swiss bank because rules make it tough for one bank to hold more than 9.9% in another bank. Then panic set in. The share price crashed, depositors started withdrawing despite the SNB promising 54 billion Swiss francs in liquidity. Finally, on Sunday, the Swiss banking authorities and the SNB persuaded UBS to buy out Credit Suisse. So, let's go back. What went wrong? Credit Suisse's problems began in 2021 when two of its large clients collapsed. The first was $5.5 billion of losses which Credit Suisse had to take when a secretive US-based hedge fund, Archegos Capital Management, collapsed. In the same year, almost the same month actually, one of its borrowers, Greensill Capital, an Australia and UK-based finance company, also folded up, forcing Credit Suisse to freeze billions in investment funds. It also suffered a direct loss of $140 million of loans that it had lent to Greensill. Credit Suisse suffered even more reputational damage and a fine of $475 million over a corruption scandal involving Mozambique's tuna bonds. Credit Suisse has arranged loans worth $1.3 billion between 2012 and 2016 to develop the tuna fishing industry in Mozambique. However, the loan was kept a secret from the country's parliament. The money never reached Mozambique. It was laundered through an account in Abu Dhabi and reached politicians, contractors and bankers. Credit Suisse reported a net loss of 1.7 billion Swiss francs in 2021 and a further 7.3 billion Swiss francs loss in 2022. Deposits fell 40% last year to 234 billion Swiss francs, equivalent to 252 billion US dollars, while total assets dropped 30% to 531 billion Swiss francs. That's about 571 billion US dollars. That's because the bank was scaling back its businesses. In spite of reporting such hefty losses in 21 and 22, the bank said on Tuesday it found material weaknesses in its 2021 and 2022 financial reporting process. The announcement came at a time when investor confidence in banks was already running low due to the twin banking collapses in the US, SVB and Signature banks, although the reasons for the collapse of the US banks had nothing at all to do with what was roiling Credit Suisse. The bank faced as much as $10 billion in customer outflows every day last week. With investor and depositor confidence failing to recover until Friday, Swiss authorities over the weekend forced its merger with the country's largest bank, UBS.